And for more on these markets, I do want to bring in our next guest, Mark Scribner. He's Managing Director and CFO of Oxygen Financial Markets. Good to have you with me this morning. Looks like as these losses have accelerated, the NASDAQ now set to lose more than 3% at the open. What do investors need to know about the tech-heavy index?
Well, this recovery has been pretty narrow for the most part. This melt up is been going on for quite a while. I think it's a wait and see. I mean, some of your folks might be waiting for opportunities to get some entry points, but you have companies out there that have $400 billion market caps with no revenue, just a big rise in a very short period of time. So I think you need to be cautious here.
Okay, so Softbank, a major factor, it seems, in this NASDAQ run-up that we had seen. How does Softbank factor into this, and how the NASDAQ might perform in the coming week?
Yeah, I'm not really sure. I mean, I know they had a bunch of options that were put out there for a while, and whether those are all being unwound now or they're just looking to reorganize their portfolio, it remains to be seen.
Is there a place where you're putting money to work?
Yeah, we take a pragmatic approach to what we look at for investment cycles. One of the areas that we've really liked is the work from home space. If you look at all the things that your consumers are using, like video conferencing, document signing, things like that, cybersecurity, that space, there's actually a ETF in that space called WFH. And if you look inside the holdings, there's a lot of good examples of some companies in that particular space. And the next area that we really like is telemedicine. It's been pretty popular before the pandemic. It's become the norm now. So things around like telemedicine, 5G, for example, you need the bandwidth in order to get that diagnosis from your dermatologist. And then the other area that we really like is the home renovation space. If you looked at some of the earnings a couple weeks ago, they were tremendous. The refinancing in that space is up a lot, and people are making their homes kind of their primary workplace. So home renovation has also been very popular.
Okay, so I want to dig in a little bit to this work from home WFH ETF that you mentioned here. Most of the holdings obviously are in the U.S. Zoom, one of the biggest companies that we've seen be a work from home bet. It is the largest holding in this ETF at 5.7% of the overall portfolio, down several percentage points, set to open down 4% this morning. So the pullback that we currently see in work from home, including the tech names, do you think that that is short-lived, and if so, why?
Well, everything is contingent right now on the vaccine. So, there's a lot of talk about when that's going to be placed. Some of these trends that we see, like work from home, for example, like the large office space has been reduced dramatically. When I walk to work every single day, I see for sale, for lease signs in the commercial real estate space. So some of these trends that we're seeing are going to be long lasting. They're not short lived. So we do think, over the next 3 to 5 years, you're going to see some traction. A lot of companies have already announced that they've been able to figure it out. So they're allowing their workers to work from home. And obviously, they're able to save an enormous amount of money with some of the commercial real estate footprint.
At what point do we need another fiscal stimulus package to avoid a sell-off in the market?
Well, I think that's what everybody's been waiting for, and that's probably what's buoyed the markets for so long. We're looking for more stimulus, but you can't keep kicking the can down the road with this. Eventually, we're going to see the demand needs to come back. I mean, demand's soft right now. 70% of the U.S. economy is consumer-based. So, with that demand being very small, until demand starts to increase, then I think we need to be a little bit cautious.
The fact that the Fed is going to keep rates low for a very long time. We saw, of course, what happened in the wake of the financial crisis. It was hard to pick stocks because everything moved higher. The fact that we're going to get those ultra-low rates for the foreseeable future, how is that changing your investment strategy?
Well, access to capital is cheap, but companies right now, for example, have stopped some of their share buybacks. You see some of the small business starts to slow down a little bit. It's obviously great that the Fed's accommodating, but the question will be for how long.
Mm-hmm. Okay, so you still feel like you can pick and choose winners and losers in this market, despite what history would tell us is that everything probably will go higher once we get a vaccine.
Well, I don't know if that's, valuations are still very important. So I think you have to look at the names that you want, be patient. You shouldn't be in the stock market, obviously, unless you're going to be there for a long period of time. It's not a short-term type of proposition typically, and it can go the other way very fast. But I think, ultimately we're going to get through this recovery. Earnings will start to pick up, and then we'll hopefully have some long-term sustainability.
Okay, Tesla, the fact that it's not getting added to the S&P 500, Mark, I'm sure you have strong bears and bulls on both sides. That's always been the case with the stock. People who are very supportive of it, believe in Elon Musk, and others who really do not see the strength in the balance sheet to justify these stock prices. On Friday, the Dow Jones S&P Indices Committee deciding that Tesla is not going to be added to the S&P 500. Do you think, given the speculative nature of Tesla, that does protect the integrity of the S&P?
Yeah, I'm not really sure what the mechanics are for how they'll go through that process of a company like that. But I'm a big fan of Elon Musk and all the different things that he's able to do. The valuations are just mind-boggling in a lot of respects. They're not making any money. Almost a $400 billion market cap is pretty unbelievable in a short period of time. But the jury's still out. He's a very innovative person, and I think people are buying into that particular company for many years in the future.
Mm-hmm. The general EV space has just exploded in the coronavirus, despite gas prices being near historic lows. Are you bullish generally on EV?
Yeah, I really am excited about it. I think as you start to see 5G and some of the other bandwidth things around that, there's a lot of different subsets that will benefit from that. Again, it might depend on who is in office. If the Democrats go, maybe there's more of a push for some programs for EV that are out there. But the long-term trend for EV is very exciting.
Mm-hmm. Now, fears of a coronavirus pickup, we certainly saw that happen after Memorial Day, after the 4th of July. How does that factor into the way that you're looking at your investments, knowing that after this holiday weekend and the return to school, that we could start to see these COVID cases pick up in the next few weeks?
We're taking a lot of risk off. I mean, the virus, if it does start to take an uptick after Labor Day, will be something to watch for sure. But again, the valuations, we've had a great run in a short period of time. Coming into an election and some of the uncertainty around that, I think it warrants to take a little bit of risk off the table and accumulate some cash.
All right, Mark Scribner, he's Managing Director and CFO of Oxygen Financial. Thanks, Mark.